If you just bought a business, congratulations. There's a lot of work to do, but one of the things that you probably aren't thinking of that you should be is taxes. So today we're going to go over when you buy a business how to properly get set up for taxes, make sure that you are allocating goodwill, depreciation, your entities are structured properly, and your bookkeeping set up so that you don't fall into some of the horror stories we'll get into in this video. Hi, my name is Zachary Jensen. I'm the managing partner here at TaxWise Financial Services. In today's video, we're going to go over the things that you need to get right when you start off. That way you can focus on the millions of other things you need to do when buying a company. So when you acquire a business, you have a million things competing for your attention, from learning the operations to managing employees, retaining customers, driving revenue, that kind of thing. And it's easy to get swept up in the day-to-day demands. But if you want to set yourself up for long-term success, there are a few critical accounting and tax related things you got to get right from the start. And overlooking these areas can lead to unnecessary taxes, compliance headaches, and financial inefficiency that can haunt you for years and cause you to lose out on money that could be going into your pocket as a result of good planning. So by focusing on these areas early, you can lay a solid foundation for success. And the best part is you can work with someone, get it done in a few hours, and just have it all set up for success. So don't ignore these because your risk in creating hidden problems for yourself can surface from bad planning. So let's dive into the items. So the first thing you're going to need to nail down is how to allocate the purchase price from the business between depreciable assets and intangible assets like goodwill. So let's say you're buying a company for $1 million and fail to document that there's $300,000 of reflected equipment, vehicles, and fixtures. You could miss out on immediate depreciation deductions, potentially leaving tens of thousands of dollars on the table in year one. And on the flip side, a buyer who works with an accountant to prepare a detailed purchase price allocation might claim bonus depreciation, Section 179 expense, these kind of things, and actually reduce their taxable income by $300,000 right out of the gate. And that frees them up to have that extra money to go and reinvest in growth or just keep it for themselves. So if you don't do this right away, you could end up with an allocation that raises either red flags, right, you're doing too much, or not enough, and you're missing out on large deductions. The next item you got to worry about is actually structuring your entities because this matters a lot more than a lot of new owners realize. You got to consider the fact that a business owner rushing into operations, and you do a simple sole proprietor or LLC, and you're just trying to get after it, not realizing that you could set up a S corporation or a C corporation and have a little bit more thought to it and actually maximize your earnings and reduce your self-employment tax. As we kind of go over with our clients, if you just are doing a sole proprietorship or basic LLC and receiving money, you have 15.3% self-employment tax. That's huge. If we can get you set up and do an S corporation and get rid of that self-employment tax by running a reasonable payroll, that's going to save you tens of thousands of dollars per year. And if we take that a step further, if we set up a C corporation to act as a management or consulting company alongside that S corporation, we can actually allow you to contribute to a self-employed 401k or other more complex retirement plans that you would not be allowed to do in that S corp because you have other payroll with other staff members and this sort of thing. And as it's well known, if you offer a great retirement package, you got to offer it to all your employees, not just the well compensated ones. So this can have you avoid kind of these legal issues while maximizing your retirement planning. A bit more about how this works. So those who structure with an LLC for an S corp and then have a C corp consulting company entity or holdco can directly pay the C corporation as an expense from the S corp, run a reasonable payroll, and fund both the employee and employer contributions to their retirement plans in the C Corp, legally shielding them from higher taxes while securing their future. One real world example, actually, a buyer who set this up correctly in the first year saved over $40,000 in retirement contributions and will for the rest of their life just because they had good planning with us. And, if they hadn't done planning with us, they wouldn't have found that deduction. So a bit more on the retirement planning stuff. If you establish the plan and payroll correctly, you can take advantage of substantial tax deferred savings. For example, a business owner with a self-employed 401k can actually contribute up to $66,000 annually between employee deferrals and employer contributions, dramatically reducing taxable income. And the best part is, if you have a spouse, you can do this double. So you can add them to the C corporation, get them on the payroll, and actually get up to that, whatever that is, $132,000 maximum for the write-off there. And that's just on the solo 401k. There's also mega backdoor Roth, which for our high earners is something that can go even farther. So there's a lot of value to this, and I've seen a lot of business owners wait too long and found themselves scrambling at year end, only to not qualify or miss out or have issues with the payroll because they got to set it up weird. So make sure that you get this one done right as soon as you buy the company. That way you can maximize your deductions. And then, of course, one that's not super sexy, but I'll go over is the bookkeeping, right? Bookkeeping is the backbone of all this planning, right? If you get this right from the beginning, you can set up an accurate chart of accounts, categorize expenses properly, and reconcile monthly, and make sure that your income shows as low as possible on your books, obviously in a legal way. That way, we have a strong starting point for your adjusted gross income going into the tax planning. With the bookkeeping, you'll have clean data that supports strong decision making, maximizing deductions, and ensuring your compliance. But if you neglect this piece, guys, I mean, it can be severe. I've seen owners that put bookkeeping on the back burner and end up with years worth of messy, incomplete records, and it requires expensive cleanup work, right? It's a lot of work to clean up a whole year's worth of tax, a whole year's worth of bookkeeping. So, worse, they could be missing out on deductions, categorizing things inaccurately, right, or missing out on various deductions that could have been set up properly from the beginning. So on the positive side, those that invest in professional bookkeeping from day one often find they have the ability to spot cost savings right away, smoother tax seasons overall, and just feel confident and audit ready. So in short, these are the things you want to get right starting out. There's a lot to juggle when you buy a company. I know this because I bought companies. It's tempting to push accounting and tax down the list and worry about operations, but doing so creates risks that can erode your profits and create long-term stress. So on the other hand, if you actually handle these proactively, have someone handle it for you with good purchase price allocations, smart entity structuring, strong retirement planning, and clean books, you really set yourself up for financial strength, resilience, and peace of mind all from day one. So the choice between kind of starting off and having a rough time or just getting it all set up and being set up for success is pretty obvious to me. If you need someone that can help you with this sort of thing, obviously I am biased. Please reach out to us in the description below, and I hope that you have the best of luck in buying your company. Thanks so much for watching, and have a great day.